Good morning, everyone. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day update here. A little row crop, corn and beans specifically. Price action update here ahead of the WISE report. We got about 53 minutes to go until those numbers hit. I don't have much to add outside of what you've already seen on social media, I'm sure, and other forecasts for what those numbers are going to be. I will say there's obviously a shift in this report from where some of the focus is. That's something that, as a, the trader in me has a tendency to feel that what we're going to see in the commitment of traders later today will be a lot more indicative of perhaps how much fuel any kind of rally potentially still has. Because I'm certainly in the camp that sees the relief price action and corn and beans of the last couple weeks here as more of a short covering, rally in the midst of a early spring weather market that if a crop gets in, all of that disappears overnight. Any concerns for a late plant can be put behind you, and then you're left with otherwise pretty favorable growing conditions and a start to a growing season that could result in a monster crop if any of the current projections for both acreage and yield come to fruition, right? So let's get down to the daily charts. I want to start with July corn. We'll look at December corn, move into July beans, and then Novi beans real quick. Give yourselves a quick look at where some of the bigger facts and figures are that, hey, on a news day like today, could be support and resistances that this market's going to hunt out and try to find. Generally speaking, we've been heading up in what has been a three-leg move to start. We've tested above that 100-day moving average here last week. July corn's come back down to test it here twice in the last week and holding it as support. We just broke above yesterday's high here a moment ago, making today a higher high and higher low after a 3-day pullback. And really, this has been a week-long range between 454 corn and 470 here for July as we're trying to, I think, establish some support here above that 100-day. Take a little step back and you can see that the highs from April and March happen to be right in this area as well, around the 460 mark. And so flirting and testing that level after going above it and maintaining it, technically speaking, is a market that has started to prove that it's making progressions higher, holding higher supports, and the next move up, other than the highs of May right now around 470, take us to that 200-day moving average. And certainly if you are interested in that level on the chart, you can't ignore when you look at December corn how there's a big old gap at $5 and a 494 200-day, which these big visible levels on the chart that just about everyone is talking about or has looked at, they have a tendency to either markets kind of don't quite get there, right, or potentially go through them. We seldom come right to them, hold them, and everybody thinks they're make everybody out to be a genius just because they're just way too visible. So if we get the type of short covering still that we saw the last week or so out of support where we've seen it hold in the last 24 hours, could easily take you above and through those levels to the upside here. And I certainly think if that momentum can continue, we have a market that is primed to go a little further than maybe the biggest bears and people that think will fall short of these levels. That's all speculation. What I care about is the fact that these figures are here and they're big levels in the chart. December corn came back and tested, and I forgot to mention, I guess, on that July contract, we did have a double bottom here this week at 554 quarter. When you look at December corn, we actually held a little bit of a higher high there. So there's definitely somebody trying to say, hey, we need to stay above this 100-day and 18-day, and that's a trend following system, in my opinion. This is the type of level that now we go push highs, the rest of the fund short should start to cover, maybe even with some velocity, and I think a move towards $5 December corn isn't out of the market, out of the touch. And I think, personally, even a retest back to the 520 figures, where we saw some of those old resistances, is not out of the question. If you draw a big old trend line on this chart too, you can make a case for somewhere just above 5 as well. Now that is just retesting back to the middle of the range that we were in last summer, and to me that feels like a market that has not only rallied just about $1 off of its low at that point, be about 80 cents into 520, but would certainly give us the spring pricing opportunity that I think is imperative to look for in a year like this. Okay, so hopefully that some optimism here over the next couple weeks of still getting weather systems and things that can push, the narrative for a quote unquote late plant out, keep a little bit of a fundamental bid and weather scare under this market. But in reality, I'm more inclined to watch the volume and the covering from the shorts, because that's the real fuel that is taking us up into wherever we find this top, right, or where it might form. On the smaller time frame charts, we'll go down to a 4-hour chart here for July corn. You can see some of the levels, a little bit clearer when you start drawing up some, put some coloration and boxes around them, right? Old support from last September through the end of the year, $4.90 to $5 area. You can make a case for even what was a little gap that actually filled in July right around $4.94, but is there in the $5 area on just July corn. So we are channeling higher off the lows. There's a trend line support. We looked at where those moving averages are. We'll look at them again here before we flip to beans, because I forgot to actually say where they were except for the 200-day. But generally speaking, this old resistance that was forming from from April, March, and even February's high is the level we're chewing through on the chart, and this kind of channel higher. We break above channel resistance, and I think you got the velocity. You could take it to $4.90 to $5. But that's all remained to be seen, and certainly through a report today. One key technical that I think is maybe being underlooked here is we've made 2 steps forward, 1 step back, 2 steps forward in corn. That's pretty much just a way of measuring, fibs here. The initial pullback into a 50% retracement. So from 422.5 lows on July corn to that high we had here for March. Well, not the highs for March, but the original high for March before that 50% pullback into 440. That turned on the idea that there were buyers here that were willing to bid up the market and looking for a negative 23% target. That would be the upside swing, right? 2 steps forward, 1 step back. Taking 2 steps forward would take you up to that area, and anything beyond that, you're starting to extend the range higher. Well, the next in the series there would be because we did trade and held 6-1-8 lines at 436 and began this channel support. At the same time, we were breaking out of old trendline resistance, as you can see drawn on this chart through various levels around that time. So the market did trade all the way up to that target area. The next in the series is from entry low to target high, and 454 was a double bottom now into the next 50%. So potential upside target towards 480 with an extension towards 495. I think this market has every technical it needs to continue higher in the short term. And I'm not about to bet on a news outcome for today's report, but technically speaking, corn looked like a buy here into these areas, and looks like it is going to still continue that trend of 2 steps forward, 1 step back higher. Now, I can't ignore that a full 50 back at this point would take you as low as 446, 445. But and down into the low end of channel support as well. If they want to roll this market over and take it down to test deeper, I think the lows of the month are still on the table as well. But this double bottom we had formed here gives me a little bit of caution. If you're hadn't basically gotten long off those levels and you have a few pennies in your favor already, I am a little fearful here that we might test stops there and what have you. But technically speaking, this looks like a market that's still trying to make progress higher, and the last week looks like consolidation after breaking above some key levels that I don't want to totally ignore. Real quick, December corn, pretty much the same chart to shift the pricing right a little bit. The open gap and 200-day up there around $4.95 and $5.03 respectively for the open gap. The old highs from April, March, and even old intra-month high here from February, we seem to be flagging above those levels. Almost a double bottom, kind of the same swing here. Market traded. Let's bring up a fib tool. Market traded right into a full 50% retracement. 2 steps forward, 1 step back. Went up to its targets. Next in the series here from swing low to high. Didn't quite fill down at 475, but certainly you can see the old resistance just visually on the chart from all these highs broke through it, and now we're trying to base and hold below it. Again, a market that probability and statistically speaking, I would say is still in an uptrend and still finding support at levels that you would think continuation higher can continue from. So we'll move into soybeans here and talk about some of those levels. But before we do, just December corn, 18-day and 100-day are coming in and right around that 476 area. Those are important levels. We're above that 55-day at 470. And again, the 494 upside 200-day seems like the next stopping point to me. The 484 is the 200-day here on July corn. Those are levels, right, that align with where this big short at the start of the year started to begin. Now we're seeing it unwind. I want to see what those figures say in the CFTC data, but we are, above that 100-day moving average with the 18-day down here at 452 and rising. Those are old resistances, now support. So we'll see how that continues here going forward. All right, July beans. A lot more volatility in the beans than in the corn. It's always to be expected. It's interesting, though, that, in terms of balance sheets, the beans were, and theoretically tighter than the corn this last year, but they have the biggest room, with the lack of export potential that we're seeing, or the lack of ability to catch up on exports unless we see some major purchasing. It really puts you behind the 8 ball if we are having the production numbers that we're seeing, come out of the USDA, or potentially, right, come out. When we're in the 90 million acre mark for any crop, we really got to take a hit on yields to knock the supply side of the balance sheet down to the point where things get tight without an absolute gangbuster export market, which corn arguably has had a much stronger export market and been ahead of on schedule in many ways, but beans being behind, 30%, it just, you don't see it coming back unless there's a major shift, right? And that's not the discussion for today's video. Anyway, we broke above that 100-day here in July corn. The 200-day has held kind of as resistance in November, beans. And we seem to, in both those contracts, kind of been pulling back or back and filling into old resistance, now support. The 18-day is crossing above the 55-day. So in terms of a trend indicator, we're starting to see some of those things and barometers that could potentially cause more short covering from entities like funds that are looking for things and reasons to be not short this market, right? But falling back below the 18-day yesterday, and even in today's price action, the 100-day, and in today's price action holding below it, leads me to believe, and where's my caution here is that beans might have a little bit more of a pullback here before they're convinced to go higher. It's been an impressive rally so far. We know how short this market was, and we'll see how short it still is, because again, on Tuesdays of this week, on the 7th there, we were, basically at highs on the chart. And that's when the reading for the CFTC data, the commitment to traders data that comes out on Friday, is actually red. So it's already a few days late, but if we're at an extreme in price, and certainly the highest prices on last Tuesday that we've been in since the start of the year, it's going to be a really good, one of the best readings we've had into how much the funds have actually covered out of this market and what it took to get there. We still see a big short in the market. There is legs for it to get, I think, back to these gap fills, which for July beans are up around 1304, and back to the 200-day. I mean, we saw a 5-day rally that took us about that distance here, but I also, am not, not naive enough to know that, hey, there's room to the downside. Just down to 1180, for example, to test the 55-day and 18-day again for July beans before, it starts and resets and heads higher too. And hey, you do a quick measurement. I mean, 1145 to 1260 almost, 1255, right? That's a $1.10 rally right in and of itself. Even if this market were to pull back to 1180, a $1.10 higher from there takes you to the 200-day, right? So beans are moving around a lot more than the corn is, and have traded this whole range a few times over. We'll see if and when markets remain convinced that they need to head higher or need to test support a little bit more before doing so. But I will say, in terms of structure and how the market's beginning off of its lows, neither the corn or the beans feel like they're anything more than a short market rally or a correction in the otherwise larger proverbial downtrend we have that started sometime last year for the larger time frame prices for both commodities. Can that change? Yeah, but it's going to take a narrative at this point to completely shift. completely shift the opinions of this market and the way it's been trading. So Novi beans testing back to the $12 psychological level, broken above it, ran up 30 and a half cents there to its highs, now back to 11.99 even and flirting kind of below it. The 100-day moving average and the 18-day are still below us around 11.82 and 11.86 respectively. The 55-day at 11.75, and all those levels really align with then an even bigger 50% retracement from 11.21 all the way up to 11.31. So there's definitely room to the downside, even if you think another leg's coming higher, to test back into trendline support, to test back to those major moving averages that have not been tested in Novi beans, and we just knifed through and went straight to the 200-day. I will just bring up, the chart of wheat real quick. We're going to spend any more time on this other than that's exactly what wheat did. We ripped through, we went to test the 200-day, and then we came back to test the 100-day and 18-day, proverbially down here around 594. I wouldn't expect anything different from soybeans here, kind of doing the same thing. So there's big supportive levels below us that if we find participation and we see the market get picked up and a reaction off of them and turn higher, there's definitely room for another leg higher. There's some upside objectives that at that point I don't think are going to be the top. I think we go through them. And then the market is really just a function of how high can the shorts take it in their covering. And I think we have a really good barometer here, knowing that the last couple of commitment of traders were at relative highs and lows of price, and we can compare those Friday commitments from the funds week over week to see, hey, when they were down at lows, they kind of built back up to this big of a short. At this week's high, they had covered out of this much of it. And if they still got a lot more to do, and we can determine that support is happening after this report and a reason for a next leg to go higher, we can have some guess as to how much their volume of covering could actually, cause change or price action to react. And in this case, it would potentially be, a move higher as they cover out of the market. Now, if we've seen that they wiped out majority, if not all of it up into these highs, there's a good chance that could be the seasonal top. But statistically speaking, from what we've seen over the last several years, which we will look at the end of this video for just a brief moment, the probability for a pricing window between May 1st and July 15th is basically like 8 out of the last 10 years, right? We found a seasonal top, and you did better off selling at almost any point during that window relative to the next following December or November. And actually, I take that back. I think we'll look at that in an entirely different video here this afternoon after the dust has settled on the report here in 35 minutes. So real quickly, kind of already mentioned some of those levels here for July beans, but we are just, had just poked our head above that high from February. The highs of April are now kind of tested back as proverbial. Switch our chart here back as support. $12 here for July beans is the full 50% retracement, and that would be a test back down into this old high that we were holding for the month of April, the latter month of April, the resistance that we blew through and have now established ourselves above and back and filled, so to speak, into some old resistance, hopefully now support if this trend is going to continue higher. Big resistance for July up into that gap fill in the $13 area. That's the old support from October through the end of last year. It's going to be a tough nut to crack at $13, but we will see how things fare into it if it gets there. I can't rule out the market retracing all the way down to lows of the month and towards trendline support of this corrective rally. Just because this market has traded it once, twice, 3, 4 times already, there's not much I give credence or have faith in the middle of this range that we've been in, since February, right? The market has proven to us that will trade the book, so to speak, and just whip through that entire range. Novi beans, not much different here on the 4-hour chart. The old levels here we go, around the 1240 area and that open gap. It was that supportive area in this old supportive range. We've kind of already tested up into that area, which leads me to believe that we've already fallen short on November beans getting to that gap fill and its 200-day, which that could be a signal for a top. And if you really want to get down to it, this looks like 3 waves up into equal legs. I'm still hopeful the fact that the back and fill has held into $12, that we have, old levels here that are holding. And there is some support here on the chart when we consider, where 100-day, 18-day, and other moving averages are that we're finally above. But we really can't afford to watch this market give back to 1160, technically speaking, and it really shouldn't. 1180 should to 1175 with the other big moving averages that have now turned higher, the 18-day and the 55-day, for example. You would expect the market to be respecting these if we're going to continue higher. So again, Novi beans kind of lead me to believe that the bigger chart and range, and I'll bring this up here again, that if we go towards that gap fill at 1240, I don't think we stop there. The 200, I think $13 for Novi beans ends up being kind of the top end of this range. And I am really eyeing at this point this major trend line on this daily chart of beans. It comes in somewhere around 1280. I don't know why my tool's not working. Let's try that again. There we go. You can see it here. Not a perfect drawing of it, but the idea is, right, there's a trend line somewhere around here. I'm having trouble drawing it because of my system. There we go. And there's been generally a giant bull flag, right? And I'm not saying we can't break out of 13 and go higher, but I think what it's going to take is a narrative shift away from, and maybe even a continued late plant to the point where, well, beans are ways away from a late plant, but I think it's going to take weather events this summer and other things to happen. And that could be South American related, that can be here, but the narrative as it stands for the current balance sheet is an expanding one, and that's not one that takes you above $13 beans just yet. Yes, the return of the inflation trade, we can talk about that all we want, but the fact of the matter is that most of our agriculture products already had their inflation trade, and now we are in a period of price discovery back lower to determine the new normal for that range, right? You can look at a lot of commodities that inflated over the last few years. That's a rising tide that all ships found, and now we're seeing how far out the tide is able to go. And I hesitate to call it deflation, but certainly finding what the new normal for low in prices, and that's been kind of the name of the game, right? How far down can we go in these environments if we really are quote unquote inflationary? So all that being said, we'll see where this report comes out here in just 30 minutes. I hope you've enjoyed our little strategy of the day video here, giving you some price action information to look into. Give me a call, 312-801-4231. You can find me on X, no longer Twitter there, or on Facebook, or shoot me an email at dhussey@zaner.com. Thanks for joining me, everybody, and have a great day.